What's going on, everyone? Welcome to the Modern Mortgage Show with Rocco, where I interview mortgage professionals that share their stories and valuable information about the industry. I'm your host, Rocco, and I'm super excited to introduce my guest today. His name is Trevor Higgins, and he is a branch sales manager at Fairway Independent Mortgage of the Carolinas out of Charlotte, North Carolina. Trevor, welcome to the show.
Thanks for having me, Rocco.
Absolutely. Thank you for being here. So, Trevor, let's start the show. Can you please just tell us about yourself, give us a brief introduction?
Yeah, absolutely. I live in Charlotte, North Carolina, but originally from Ohio. I lived there most of my life and then did a little bit of moving around prior to landing here in Charlotte. So I lived in Maryland, then Long Island, and then here. So moved around a couple of places, and experienced a few things. Figured out what I like and don't like, and got to Charlotte, found the mortgage business, and been here ever since.
Have you ever been in South Carolina?
Yeah, actually, ironically, I live right over the border in South Carolina. Uh, but yeah, we're right next to Charlotte, so it's
Okay,
about
yeah, that's
30 minutes outside
interesting
of it.
because when I was searching some stuff about you before the show, one page said you were in Rock Hill, South Carolina, and then I looked on your LinkedIn and it said Charlotte, North Carolina. So I
Yeah. It's right. They're right next to each other. So Rock Hill's about 20 minutes outside of Charlotte. Charlotte's right on the border. So yeah, we bounce back and forth.
awesome. So how long have you been in the industry?
5 years now.
5 years. And how'd you get your start?
Yeah, great question. So, ironically, I was in the fitness business.
Hmm.
I was in the fitness industry for about almost 8 years. And the company I worked for relocated me to Charlotte due to airport and our headquarters being in Raleigh on the other side of Charlotte. I'm right on the other side of North Carolina. And shortly after coming here, the company just had some financial issues and it ended up going bankrupt. So I needed to find something to do.
Hmm.
A good buddy of mine from back in Ohio had started as a loan originator with Chase in Columbus and was like, "Hey man, I'm making all kinds of money. This is a great job. It's fantastic. You're gonna love it." Well, I was in my mid 20s. I had no idea what a mortgage was. I didn't know, I didn't know what I was doing. So I picked up a book, Mortgages for Dummies, ironically, read it, said, all right, I'm going to show up at Wells Fargo and see if they hire me. And so they did, and the rest is history.
Awesome. So you worked at Wells Fargo, and then you also worked at a bank before Fairway.
Yep, Fifth Third Bank did a short stint there.
Awesome. So do you feel there was a big difference working at a bank as opposed to what you're doing now?
Yeah, a huge difference, huge difference. So banks just operate differently.
Hmm.
Mortgages are not their only products.
Yeah,
So, they've got checking accounts, savings accounts, other lending products, all kinds of investments, all kinds of different facets of business. So they're very spread out. Whereas a correspondent lender or mortgage lender, this is all we do. At Fairway, they only do mortgages. We have no other products that we can do. So we're going to be really, really good at mortgages.
hmm,
Where although some banks are good at mortgages, that's not maybe their best thing just because they have so many different assets or avenues of business that they have to manage.
for sure. So you're really niched down. Only that's your only product is mortgages. So you're a real expert in the space. So what caused you to make the switch over from a bank?
Yeah, so I had Wells Fargo, a couple years ago. It was in the news every day. So I had built up a decent referral base, and it was
Hmm.
coming in. The business was starting to come in, and then I had some referral partners say, "Hey, Trevor, my clients don't want to call you because you work for Wells Fargo," and that started to become more and more frequent. So I was like, "Well, I've got to make a change. I've got to figure something out. This is not going to work." So I started to interview different lenders, and I thought I still wanted to stay with the comfort of a bank. So that's when I ended up transitioning over to Fifth Third, thinking that that was going to be, a better avenue for business.
Hmm.
Um, Long story short, that was not necessarily that Fifth Third Bank at that time was in a really transitional state. They were rolling out new software to the company. They were very outdated in terms of their processes and procedures, and they were updating those. But you know, you're a couple of years out on making those changes, and the company understanding them. It's going to take a little while. So there's going to be a little bit of learning curve there. So it wasn't the right time to be in a bank. So I didn't want to be a person that's just going to jump from one company to another company to another company. So I took the time to interview a lot of different lenders, and banks included, and narrowed it down to a couple of them. So I picked the top three, and from there, really just started to call other loan officers, other real estate agents, some that I knew, some that I didn't, and get their opinion, people that are working for those companies, and get their opinion so I can really make the best decision. And that's how I landed at Fairway.
So you did a ton of research beforehand.
Yep, absolutely.
So you were at Wells Fargo and then Fifth Third. Why didn't you, or were you thinking of Chase, like your buddy in Ohio?
Yeah, they're actually not in Charlotte. They don't
Hmm.
really have a presence here, so it wasn't really an option unless I wanted to
Yeah.
move. Yeah, so that made that decision easy, right?
Yeah. Okay, awesome. Definitely. So moving along, there's a lot of buzz going on right now in the world. Obviously, we're in a strange time that's affecting the industry. How does the Fed's rate affect the mortgage rates?
Oh, great question. That's probably one of the biggest phone calls that we're getting right now.
Mhm.
Phones are blowing up asking us, hey, our interest rates lower. I heard they're lower. They're going down. So I'm really glad you brought it up. And what the Fed rate is, in a nutshell, is the rate at which banks lend money to each other.
Mhm.
What that controls is short-term interest rates. So things like car loans, credit cards, equity lines, portfolio lending from that bank. So it's completely separate from the mortgage rates in the mortgage industry, which is driven by the bond market, mortgage-backed securities. So in a nutshell, although the effects from the Fed's lowering rates can have an effect on mortgage rates, it doesn't dictate mortgage rates.
Mhm.
So we're actually seeing rates pretty flat, pretty steady right now. I mean, they went down a tiny little bit yesterday. Today they're kind of up a little bit, but it's not necessarily connected. The bigger impact on mortgage rates is going to be the global economy. So as the global economy continues to see some turmoil from the coronavirus and COVID-19, then that turmoil in an economic standpoint is going to cause some movement into the bond market and lower interest rates. So I think over the next couple of weeks, I expect the interest rates to continue to go down, but it's just not correlated to the Fed interest rate reduction.
Exactly. Yeah. Great answer. I have a huge network of loan officers and brokers on Facebook and LinkedIn, and everybody's posting about it. The Fed's rate is not the same as the mortgage rates because everyone's calling and blowing up their phone. Am I going to can I refinance to a 0% rate or whatever?
Yeah, exactly.
Awesome. So moving along, we were talking this morning before the podcast, and you had a closing.
Yeah,
Yeah. So what would you say is the most fulfilling thing about your job?
absolutely. So, kind of dialing it back to where I started. So I started in the fitness industry, and
Mhm.
I originally got into the fitness industry to help people, right? I was originally a personal trainer through college, and so I wanted to help people be better, to be healthier, just to improve themselves. And now, although it's not in the fitness aspect of things, it can be financial fitness. So helping people, buying a home is the easiest and simplest way to establish wealth, in the United States for the average American. So with equity and home appreciation, it really allows people to not only have ownership, but build that long-term wealth that can be multi-generational. So that was really one big kind of turn on, or I guess reason I'm here, and why I like the mortgage industry is just because you get to help people with their finances. So you can really help that make that happen. And also just figuring it out, as far as other clients that have been told no, that have been denied, issues with underwriting or whatever, figuring out how to make that work, or if there's things we got to do to plan to get ready, make that happen for them. So it's been really rewarding to see, especially first-time home buyers get keys for the first time. There's nothing more satisfying than seeing somebody that's worked really hard to get where they are, to sign those papers and get those keys to their very first home.
Absolutely. So you started because your friend said he was making a bunch of money, but now it's transitioned to impacting people's lives.
Yeah, I mean, why you can do both, right?
Yeah.
Yeah, so that was, obviously the original thought was my buddy sending me a bunch of snapshots of his paychecks at Chase Bank, and I was like, well, that's motivating, right? But then as I got into it, you got to really help people. You got to see people in need, and be that kind of voice that a lot of people don't have. A lot of educational system in today's world doesn't educate people on what a mortgage is, or credit, or savings, or things like that. So being able to, I might be the only person that's ever talked to that person about financial well-being and financial health. So it gives us that ability to take that route.
Yeah, and finding the lender is absolutely crucial too, because a lot of people are misinformed. Like you said, I have a quick story. So we work with veterans that are wanting to get a VA loan, and we allow loan officers and brokers to join our network and help these veterans. So um, we had a client, and a veteran came through our program, and he was living in a motel because all the lenders were turning him away. They wouldn't educate him. They just basically said no. And then our broker, who was in our network in that area, took him in, and he was living in a motel for 3 weeks, and they got him into a home within just a few weeks. So definitely it's crucial to find a right lender who cares. Trevor, are you I can't hear you. Technical difficulties. Let's wait a second. Let's try to get Trevor back on. Trevor,
Hey, coming back. Can you
I
hear me?
got you back. Yep.
Technical difficulties apparently.
Yep. I let him know. Okay, awesome.
Sorry about that.
No problem. So let's shift gears here for a second. So you got your start in the industry about 5 years ago.
Yep.
What would you say was your biggest struggle or obstacle you faced early on?
Yeah. Probably just understanding what a referral based business looks like,
Mhm.
how to network, but also finding your niche. A lot of different people work in different areas. So loan officers find their niche in certain products or certain industries, certain networks. Some people like to work with, real estate agents. Some people like to work with builders. Some people like to work direct to the consumer, and do advertising that way. So figuring out where my niche was, and figuring out where the best place to put my time and resources would be. So that always took a little time. And then ultimately, again, a referral based business takes time. So just building those relationships and understanding that everything that I do today is going to help, but we got to make it to that point.
Definitely, it's crucial. You can either have be general and it takes some time, or you can go super focused, super niche down on something, become an expert in that, and that really pays off. And for sure, building a huge referral network is important because you have business coming at you from all different ways. So what advice would you give to a loan officer, say yourself 5 years ago, if you had to talk with you then, what advice would you give to yourself 5 years ago just starting out?
Oh, great question. So, number one, you'll make it through, right? I mean, I think even today, there's always days that you're going to want to quit. There's
Mhm.
always days that you're going to want to give up. I mean, it is still a crazy industry in the fact that you're your own salary. So if you don't close loans, you don't make a paycheck, just like a real estate agent, just like a financial advisor, just like a lot of different people and a lot of different industries out there. You kind of own your own business. So stick with it. And also to mute out voices that don't line up with your personality. So, there's a lot of different salespeople out there. There's a lot of different ways to create success. And I've tried a lot of them, but the people that don't click with the way that I work, the people don't mesh with my personality, those sales tactics are never going to work for me. So I tried a lot of silly things that weren't my cup of tea.
I'm so glad you brought that up because closing is so critical. Take the C out of close and you lose, and that's the truth. Um, there's a bunch of different ways to close, and I've tried them all too. I've tried different ways, a high pace, low pace, your tonality, and what it really comes down to is just caring and being truthful and honest, and that's the best technique that I found.
Absolutely agree.
Okay, awesome. So in recent years, technology has really made a big impact in the industry. Would you say this has affected your business in a more positive or negative way, and how?
Yeah, another great question. So, technology is definitely the way of the future. Um, Loan officers and real estate agents, and in fact, any self-employed business owner that doesn't jump on the technology train is going to get left in the dark. I mean, with Facebook and social media, online applications, iBuyers, people that are buying and selling houses online using, selling a house with Zillow and Open Door, these different companies that are trying to revolutionize or change the way people sell homes. There's a lot of stuff out there. So, definitely being on the forefront of that is a must. We have to. If we don't, again, like I said, we're going to get left in the dust. So, it's really about making yourself, recession proof, but also time proof. Of if the industry continues and technology continues to get better, I've got to adapt to that,
Mhm.
or I'm going to lose. If I can use my online application and get you a pre-approval in an hour, and there, it takes you 3 days to go to your bank and get a pre-approval, then I'm going to win because I can do it faster and I can take on more business because my time is more efficient. But also, taking advantage of the ability that we have to be in front of so many people with the different platforms that are available to us. I don't think we've ever had as easy access to consumers as right now. So, long story short, I think it's a huge positive. I think the only negative are going to be people that don't adapt. So, loan officers that are still stuck in old ways, or real estate agents that are still stuck in old ways, saying continue to do things that may be successful right now today, but down the road, it's not going to be able to be.
Absolutely, it's definitely like an ego thing too. I found like they don't want to adapt because they've been doing this for 20 years or however long.
Oh, yeah.
So if you want to build a long-term business, a long-term empire, you're going to have to, number one, you're going to have to build some sort of online presence and authority. And number two, you're going to have to adapt and overcome because everything's always going to be changing and you're just going to have to absorb it and overcome it and adapt to it.
Absolutely.
So going on the social media and online, are there any modern strategies that you're now using that's helping you in any way to maybe scale your production, maintain better relationships, or just systemize your business in any way?
Yeah, I think that one pivotal piece in everything, no matter how you're doing business, is a database, right? Your book of business is everything, no matter what kind of business you're in. So a CRM is huge.
Mhm.
We have a fantastic CRM that really kind of helps us integrate social media, our current book of business, real estate agents, and everything. So it's top notch. They're continuing to advance it with growing technology. So that would definitely be the first thing that is a must. Um, staying relevant on social media, some people, if it's 2020 and you don't even have a business page set up, like you probably should read an article or something, So it's definitely something that is important. And so, as far as what we're doing, outside of just blog posts, and keeping social media pumped through content, is also adapting video content. So video is huge. There's plenty of statistics out there that show that it's getting more click-through rates, that it's getting more likes and comments and shares. People are going to watch it rather than read something. So just continuing to get better at video content and pushing the right content out there, and staying in front of people, and also utilizing it just at all, right? I mean, understanding that it's not going to do anything for me unless I actually take action.
Definitely. I'm glad you brought up the CRM and staying in front of people. CRM is crucial because it allows you to nurture your leads. It allows you to build that database and continue to stay in front of them and in front of prospects and nurture them and keep you at top of mind, because not everyone's going to be ready to buy right away. You got to stay in front of them for 3 months, even a year of solid staying in front of them and follow up. Well, Trevor, it was a pleasure talking to you today. Unfortunately, that's all the time we have. So thank you so much. I really appreciate you doing this. I appreciate your time. And thank you to all the viewers for tuning in, and we will see you next time. Thank you.
Perfect. Thanks, Rocco.